Ryan, thanks for being with us today. I mean, Realogy oversees quite a portfolio of real estate brands. And so across different price points, across different markets here in the U.S., as you do see mortgage rates climb back above 4% very quickly right now, and home prices continue at these fiery increases, what do you expect in terms of how that scenario evolves through this year?
Well, first off, Morgan, thank you for having us. Look, when we look across what we're seeing with Sotheby's International Realty, Coldwell Banker, Century 21, and many of our other brands, what we're actually seeing is demand is still incredibly high for homes. And we are seeing the mortgage increase you talked about put a little bit of a damper on home resale purchases and sales. But the really high demand still seems to have sales higher than they've been for like the past decade or so. So we expect in 2022 there'll be fewer units sold than 21, but the 22 number's probably going to be higher than say 2010 to 2019 was. And then we also expect the increased prices that you continue to see, given that supply and demand imbalance.
So where do you see that demand continuing to be the most robust? Is it the higher end of the market, given the fact that we know first-time buyers, for example, are getting priced out and there's affordability issues, as well as investors competing for some of these properties?
Well, the demand's pretty strong across all parts of it, even with some of the issues at the first-time buyer level. That's the place also where the inventory is the least and the competition's the highest. And so the supply-demand mismatch is almost the biggest. What I would say is, the positive trends in the attractive tax and weather destinations show no sign of slowing. The markets of Texas and Florida and Arizona and Idaho and others continue to benefit not just from the demographic demand, but from the remote work and some of the other trends that are going on out there. And then New York City's actually had a nice comeback in the last few months. Clearly, the market hardest hit by COVID from a housing standpoint has really come back in the last few months, and we're seeing strong demand there. But again, I think units will be below where they were in 2021, but above where they were for the decade before that.
I wonder if you think, Ryan, that migration you talk about to some of those growth states is topping out, has any chance of reverting to the mean, especially maybe employers get a little more aggressive about saying, yeah, sure, you can move to a different town, but we're going to cut your pay. Things like that might bring us back to somewhat more of a picture that we saw pre-COVID.
I don't think it's going to be possible to sustain the momentum we have on this forever. Right. But it has been really strong momentum now for literally about 2 full years. And it doesn't show any signs of slowing in these really attractive markets, so far here in 2022. I think the employer choice that you talk about is an important one. As a company, we're leaning all in on remote work for our employees. And I think the more companies that do that, the more that trend is going to continue. At some point, it's got to slow down, I would predict. But we sure haven't seen any signs of it slowing down yet.